Welcome to the 5th of June, and today we're going to be looking at a low volume, a low volatility day in the markets. We had some data actually come out, as you can see on screen now, during the NY session towards the London close. ISM services, PMI, factory orders all came out worse than previous and worse than forecast, and that gave short-term strength to gold. I didn't catch any of those. You can see a nice big move on gold. Didn't catch that, unfortunately. I wasn't adapting to that or even aware of that, so that's on me. I traded London and was successful in London, so we're going to go through that very quickly. And let's hop over to the 15-minute. Have you been labeled now this time where I've entered, or roughly where I've entered? Just going to mention as well, there were no trades on GJ today. So starting the new week, and we're into June now. It's taking it slow, and you can see over Asian overnight we had a continued downfall. Sorry, from 1953 roughly that we closed on Friday. Continuation down past through 1945 and into London Open. We actually had a tap of 1939.500. This is obviously a key level for us, and so I was looking for, or in my head I was thinking, right, if we react to the zone and we start creating bullish market structure in the lower time frame, I want to execute a short-term scalp, a short-term against trend trade, because I know this area around here, the 1939.500, hasn't been broken, is a key area on the intraday timeframes, and also the higher timeframes. If we zoom out even more, if we go, to the daily, you can see we've tried to break this 1, 2, 3, 4 times already, 5, 6 previously during March as well, and this is a solid support on the daily timeframes. And you can see previous resistance roughly. So this is, to me, is not going to be broken unless we have a strong catalyst in the markets, giving dollar domination its true market crown back into play as the market sentiment. And thus, I was looking for buys, like I said, against trend, short-term trend. So if we go on to the 1 minute, might display a bit of a better picture for us. So we had London Open roughly at this candle here where my cursor is. Not much happened. You could tell the volume was low, volatility was low, candles are small, moves are very small. So I had low expectations, as you should always should actually, going into the markets. Don't expect anything. Just come in level-headed, and whatever the market presents itself with, then you take advantage. You don't expect it to present anything. So if we have a look here, we can see, I mean, hopefully you can see before I even say, you can see a nice clear double bottom, which we look for. You've got in the 1 minute, and also this was around the 1 hour close / open, so it was important to understand and recognize risk management in terms of when to enter. So we had this first break below 1939.500, then completed that move back up, corrected it. Then we had a retest of it, failed to break, long wick. 1 minute, 1 hour just opened at this candle here. We had 1, 2, 3, and then 4 candles. Started printing bullish structure, in my opinion. Rejection, very weak but bearish candle, strong bullish, closing above the last 3 minutes, and I entered around this candle here. Spread got me in a bit higher, I believe, and then we from there we carried on the trade, right? So our stop loss obviously was below these candles, about 15 pips, I believe it was when I looked, and our stop loss, or sorry, our TP was at previous 1 minute highs. And just because I was playing it safe, you could have held this trade, it would have hit 90.45, just as valid. But first trade of the week, and also against trend, I wanted to play it safe with a safe 2-to-1 trade, and it worked out well. So if we hop over to the market terminal, as we always do, you can see a nice, there we go, 1940.10 entry, just like I said, with a spread. Stop loss was about 15 pips, just about 16, and TP was 1943.44. There you go. So overall, profitable day. I'm happy with that. Didn't take advantage of the data, but going into tomorrow, if we have a look on our trading economics website, we can see Tuesday we've got nothing apart from S&P Global and CIPS construction PMI in the morning for GBP, and that's it for, I could see, pretty much for US as well. So once again, tomorrow actually is a bit different. We have lower, or we should have more volume in the markets. I'm not going to come in with expectations, but there is no data, so we may actually see either two options as always. One with higher volume in the markets because the markets aren't on edge waiting for data, or we may actually have no volume and low volume and low volatility because we are waiting for other data releases to give us more insight into where the markets may be heading.